Citibank and Moneycontrol in conversation with Unicorn Startups of India, powered by Citi.
Hello and welcome to Citibank Moneycontrol in conversation with Unicorn Startups of India, a special series. I'm your host, Paromita Chaitterjee. Now, Indian startups face a funding winter. In fact, they have been facing it for a while. So it's making it crucial for them to prioritize core capabilities and profitability over growth. Leaders debate whether to focus on building strong foundations or should they diversify for their own long-term success. And these are some of the big questions that we'll be asking our panelists on board today. And as I said, this is a series. This is the third part of our series that we've been running. We spoke with startups in Delhi as well as in Bangalore. And today it's the turn of Mumbai. So let's go across and meet up with our panelists today on this special series. We have with us, starting with Vinayak Shrivastav, who's the CEO and co-founder at VideoVerse. Next is Abhishek Sharma, the co-founder and COO at GOQii Incorporated. Aditya Agarwal, head of Global Digital Segment, Citibank India. Arindam Paul, founding member and chief business officer, Atomberg Technologies. And last but not the least, we have Priya Singh, who's the co-founder and director at Chalo Mobility. Thank you so much. So let me start off first with you, Aditya. You know, I began by saying that startups are facing a bit of a funding winter, and you know this has been doing the rounds for a while. Where would you say we are currently when it comes to funding, especially for startups today? Is it indeed money which is drying up, or you know, what are those key markers in today's market when it comes to startups?
So I think over the last few years, you know, the easy and the liberal flow of capital, of course, has helped startups scale up very, very quickly, you know, gain market share and, you know, also diversify into adjoining areas. But sometime, you know, from the early to mid last year, we've seen that capital flow has slowed down. Of course, that's also a result of the global environment and what's happening in the global world. The good part is that, you know, the liquidity with the investors continues to stay very strong. The deployment has probably slowed down a bit. What we see this has resulted in is, you know, acceleration of the journey towards profitability. So which was not so much of a key priority earlier on. You know, now we are seeing that changing. Early stage companies continue to sort of get access to capital. If you look at the statistics, you know, the number of transactions that are happening in the early stage companies continue to stay strong. I think what investors are today looking at is whether the business models that companies have in the mid stage or a late stage really have proven their mettle in terms of unit economics or, you know, the acquisition cost and stuff like that.
So interesting. So you're saying, you know, the lens or the focus is really on profitability. And let me bring in Priya into this conversation. So Priya, you know, how would you react to some of those statements, especially for somebody with your background? I understand that you've pivoted a bit, you've exited Carvale, which was your initial startup. Now you're looking at Chalo Mobility, which in a way is an early stage startup. Would I be correct in saying that?
We are 1,200 people company and not so more early startups, but yeah, we are just starting like 49 cities in India and we are just going stronger and solve the unsolved problem. So Chalo is India's #1 technology transport company who is trying to solve the buses in India, public transport. And we talk about public transport like per capita income of this country is like $200. And transport is one industry which is unsolved. And it doesn't make in the top 10 list of problems of this country because everybody seemed to be making peace with it that, okay, this is an unsolved problem and this can't be solved.
Congestion and, you know,
yeah, and you have an entire transportation in public market is a broken system. And when we go in a public transport sector, it's surprisingly for everyone that 70% buses are run by private operators.
So when you started your second innings, Priya, with Chalo Mobility, how easy was it for you to get funding? How easy was it for you to convince investors that, listen, come on board. This is a story which I think you need to get on board now.
Good thing was that we exited and we made money with Carvale. And first check we did, right? And since then till today, we kept investing in the same company just for the sheer passion. And believe that we are going to change. So when you do that, I think the market is seeing, and once you've been there, done that, and become successful and do full kind of cash exit, then people believe on the work you have done. So it was easier for us
because you had a successful track record.
Yeah, yeah, and we started with zero in Carwale. Like we didn't have anything, so 7 years it took to get there. But when it became successful and #1 product of this country, then it becomes easier to not convince people. They are convinced that okay.
So you had a strong track record. You had your own funds from selling out Carwale. So you were bootstrapped. Let me turn to the next company, and that's Atomberg Technologies. Very, it sounds like a very high-tech name. Tell us a little bit about what is it? What's the problem that Atomberg is solving?
So Atomberg is a new age technology-led consumer durable brand. I think that's when we started 8 years back. I think that's where we wanted to be, because in India, I think we saw two problems across categories. There's not a lot of India-centric innovation that was happening in the entire consumer durable space. On one side, you have a lot of legacy players, and on the other side, you have a lot of MNCs who are introducing products which have lived the life cycle in their countries of origin. So not a lot of, and that is true across categories. We started off with fans in 2015 because we had an expertise in BLDC motors, and fan as a category had not seen any innovation for 60 years. We had a product that solved two problems. By virtue of having a BLDC motor, the fans consumed 65% less electricity. You would not know this, but around 20% of your household electricity consumption for an average Indian household is from fans.
So you were solving, so one was the design element. The other was the cost
energy
element.
efficiency, yeah.
Right, okay. So, now, today here we're talking about, now you said in 2015, right?
Yeah.
So, it's about almost 8 years.
8 years, yeah.
So, you had some pretty marquee investors to start off your journey who believed in your story. Today, as you're talking about, fresh rounds of funding, what's the story that moves them? Is it again the focus on profitability, as Aditya said?
So, I think there are 2-3 things which investors have always looked for in our brand. So we were never a tech brand, although the underlying thing was a technology. We are always benchmarked with consumer brands which are public. You have a lot of public examples in our categories. So that focus on gross margins, that focus on EBITDA was always there right from day one. Okay. And in fact, all of the marquee investors which had come, when they had come, we had already reached a certain scale. So already at around a 70-80 crore ARR kind of a revenue when a lot of these marquee investors came. And we had grown this business fairly capital efficient way. So, and in fact, even today, right, our requirements of funds are because of 2-3 things. So one is we do a lot of capex investment because we believe that if you want to provide the quality that we want to provide to the Indian consumers, you cannot get it through the vendor ecosystem that we have in India. India doesn't have a manufacturing ecosystem that someone like a China has. So you need to invest disproportionately in capex, not just your own capex, but also in building the entire vendor ecosystem that you need to deliver high quality products. And the second is, these categories are fairly offline categories. These are not traditional online categories. So you need to build your offline distribution and offline brand building.
So basically, it would be suffice to say that since you entered a particular category in the consumer durable space, you anyway had to keep your eye on the returns on your investment in the business. So your eye was on the money trail from the beginning. And that has clearly helped you. Okay, let me speak to somebody else who's been here for a long time, and that's Abhishek Sharma, who's the co-founder of GOQii. Abhishek, you're wearing one of your devices, as I can see, and I think all of us are familiar with that device, but GOQii is much more than that. And you've again had a fairly long sort of gestation period, right?
So I won't say a long gestational period, but an interesting journey. So we have always been the service company. Unfortunately, people see the device because that's the physical part, of the service. In the tool layer, we build up the whole service layer of care on top of the wearables, because wearables are the means to collect data. From the day one, we believe that, okay, what do you do with the data is more important, right? How do you make an impact on person's health or person's lifestyle with using that data is more meaningful.
So
and
that was the initial premise that you began with, right?
That's the core.
That's the core of the company. Has that core, have you had to pivot along the way?
No. So we evolved. I won't say we pivoted. Our core still remains the health. We still are a health tech company, and we believe in taking care of the health of our users. When I say evolved, is that yes, we had to add on more layers of services. to make it more holistic. Like when we started, it was just the coach who is there to guide you for your health journey, but then we added more experts, we added the doctors for consultation, we added rewards. So the envision is that how do we address all health needs of the consumer on one platform, and how do we benefit consumer from that?
And what was the key demand from your investors as you went along this journey?
I think the investors looked at two things, like everyone knows, one is the profitability and second is the sustainability of business, right? So how sustainable, even if you are doing a growth, then how sustainable it is. See, fortunately or unfortunately, India kind of became the shining star in the startup world during the bubble period, right? So everyone had the...
and that's what we are asking, is the bubbles getting a few holes? I wouldn't say it's burst.
I wouldn't say bubble is getting whole, right? Bubble is getting, I would say, right-sized.
That's a nice way of putting it. The next speaker, and that's VideoVerse, Vinayak Shrivastav. I mean, you are offering, I mean, you're looking at AI and really analytics, and that's a domain that everyone's talking about. What exactly is the problem that VideoVerse is solving, and, whom do you count as customers today, as well as investors?
So, VideoVerse is trying to solve a very unique problem. It's the editing problem that's been existing for decades. The way we edit content, the way we consume content has not changed or evolved. It's only recently that people realize that content needs more exposure. That means that it needs more different ways to be edited. And the solution that we have built right now allows editing to be done at scale, but with efficiency, and also kind of automate the entire process.
Fascinating. So that's how, each one of these brands is trying to connect to us. And Aditya, what's really interesting is that they are all talking about, profitability, focus on returns on investment. It's a demand from investors, but also seems to be coming from companies themselves, right? And you were shaking your head when I was saying that the bubble is it getting a few holes? I mean, what's the big picture here? Because there seems to be a bit of pessimism overall. Would you say that startups themselves are sort of realizing this and moving along a different path? They're doing a bit of course correction?
What I would say is, like any other market or any other industry, when a lot of money starts chasing that growth, you obviously see valuations getting stretched, and there's some amount of froth which builds up. But the way I think I would look at it is whether there is a real value which is being created, there is a business model which is sound and sustainable, as Abhishek mentioned. So that is something which is key. While of course the valuations will move a little here and there, but I think the way to see is a company in its journey. Is it on the right track? Like I'll give you an example. So we talk about unit economics. A company which is as straightforward as an e-commerce or a D2C brand, it's very easy to understand the unit economics and the contribution, the way it's working. But for another company which could be an online media entertainment company, the monetization is very, very different. The unit economics is very different.
Correct. Yeah.
So I think we need to understand each and company in its own fashion, and the important part is whether the plan is in place and is being followed. So when I mentioned earlier about, the journey getting accelerated, I think, it's a very segment-specific, company-specific.
Because, it seems to be the flavor of the season, I mean, where we'd see almost a unicorn a week, if not a day. What about in terms of how you're advising your clients to move along this journey from just looking at, growing revenues to actually focusing on profitability?
So, again, it's a very situational thing, right? Depending on the life stage of the company. If a company is and we work with companies across various life stages, right? We work with companies which have gone public already, and we also work with companies which have just started, right? Which have just formed. So now for a company which is in very early stages of the life cycle, chasing profitability may not be the right strategy if it has to grow and, achieve a meaningful scale. So it's not really a trade-off between the revenue and the profitability. I think it's important that the course that you are on, is being adhered to. So when there is easy flow of capital at times, you get the urge of diversifying or scaling up very, very fast, right? I think that is where the discipline is very important, for companies to sort of stick to the plan and at times also adjust to the external environment.
Indeed. And, you brought up that very important point of diversification because, Priya come in here and as I said, maybe during your Carwale phase was a phase when we saw all startups, entering new markets, just growing, trying to get those valuation numbers up. What does diversifying mean to you in today's market?
There are 2-3 aspects of diversification. One is if you are diversifying in the core of yours. I personally believe it's okay. So if you are solving a problem which is more impactful and meaningful, and if you keep fueling the core, like if I'm solving public transport, then I have to solve 3 segments, right? And all the other segments around it, which I think is fine. But if you are diversifying in other areas also, personally, I don't think that we should be doing it, because maybe because of the complex business model which we are trying to solve, it's so much into it that you can't think about different things altogether at the same time.
So you're saying you've been focusing on your core issue, the core problem that you're trying to solve.
And whatever is related to the core, if you're solving a mass transit, then you know that people like you are taking cars out, so I'm solving with the premium buses. Or I know when masses are going to catch the buses, they do not have last mile solved. So I'm solving that with Vogo, or I'm solving this with shuttle and premium buses. So that's how the entire diversification means to me and my team, rather than, you know, acquiring more things which is not part of the core, and you get distracted in the business.
Great point about distraction. Abhishek, how do you, you know, sort of address this about not getting distracted? You can't afford to in today's market.
The unique source to the success in the startup world is focus, right? So you go out solving one problem, right? Yeah, there can be different approach, or you need to acquire a different tools over a period of time to solve that problem. I won't call it as a diversification, right? That's a growth, right? Because everything changes, your environment changes, consumer demands changes, the requirement of solving that problem changes.
So basically you're saying keep pace with the customer. If the
keep pace with the customer. So like where we started, right? So the ecosystem what we have built over a period of last, I would say 7 years, is not what we started with. But this is what the consumer told us that that's what they want, right? They wanted to consult a doctor because they wanted a medical opinion on their condition or their health, right? They wanted to get the reward.
But do you judge the customer acquisition or customer expectation metrics against, you know, what's going to be my ROI on satisfying this expectation?
So that's a delicate balance to maintain, right? So one is like, you know, with all the capital flowing, and I won't blame only just the founders for, you know, that shrinking the bubble. Investors are equally, you know, greedy on that part of it, right? Who is asking you to give that much of money or flooding the market with that one with unrealistic
Basically,
goals?
You're saying investors spoiled us, or investors spoiled the startup? Both ways. Okay.
It takes 2 hands to clap.
Okay. Arindam, I mean, you know, bringing up that point, some great points at Abhishek. How do you apply it to your business?
See, I think when it comes to diversification, right, I think there are 2 things that we look into. See, one is your core business has to be making money. If your core is not strong enough and not making money, at a EBITDA level at least, you should not spend your time and energy moving into other. And the second part is whenever you look at diversification, right? So for example, I'll give you our example. So we sell fans. We are reaching out to 15,000 plus counters, which also sell 5 other categories, say lights, switches, wires, geysers, and so on and so forth. Now, it could be very easy for us to launch all of this product, because if I just want to increase revenue, right, overnight I can increase revenue. But then we ask ourselves the question, do we have a right to win in the category? And the right to win again comes back to the consumer saying, are you solving some consumer problem better than any other brand which is there in the category? And is there a defensibility in whatever you are doing in trying to solve?
And of course, again, it's category specific, right?
Category specific.
You are in the consumer durable market. You know, Vinayak, would you approach this a little differently? Because, you know, you are using technology as a platform.
Yeah, absolutely. The core of the business definitely has to be rock solid, right? It has to be generating money before you try
But you have expanded across markets.
We have, but we've only done it after our core business kind of became stable, right? Today, we're at a position where the core business is profitable on an EBITDA level. We have been making money for the last 18 months, right? So we are not burning any cash. That gives us the flexibility to try different things. Now, obviously, raising money is a different thing. We ended up raising money in between all of this, right? We just closed a round last year, so we know what it takes to close a round in the funding winter that everyone is calling it. But access to capital does not mean that you can solve problems by just diversifying and kind of, you know, growing multiple solutions to it. It has to be done methodologically, and you also have to realize that the core business has to be stable to do this. If you're not making money in one business, you can't try different things. it's only when we started making money there is when we started expanding into different things. And now we're looking at like the entire universe around media as an ecosystem play.
Okay, so focus on the core. Yes.
What Vinayak is saying is so core to understand the entire ecosystem and market. First of all, no founder is a traditional mentality founder when you are starting up something as first generation, you know, entrepreneurs. So their focus is to solve the problem. Second is, if you see Google, and we were talking about the Google, like they solved search and they started making money. Facebook solved Facebook first, then they went to WhatsApp. So Google solved search, then they went to YouTube and then Gmail and everything. So what he is saying makes a lot of sense to all of us, and I am sure that all of us agree that you have to solve one problem, make money, and may not be break even is important because it's not in the air what it used to be maybe some years back, and everybody, all of us want to focus on that fine balance between, you know, getting money to what we are doing because we are not social enterprises and, you know, NGOs. And second thing is keep solving by diversifying in the core. That how can we expand in the same thing.
So focus on your core proposition and, you know, start with diversifying within your core proposition before you head out. But having said that, you know, Aditya, you spoke about some of the larger entities and unicorns who tap the primary markets, and you know, they spread themselves quite thin, and we are seeing a lot of pressure on them now to deliver on those kind of returns. Earlier on, a lot of these companies were focused on whether it was diversifying their offerings or whether it was exploring new geographies. You know, is that still an approach that works in today's market? I mean, how important is it for some of these startup founders to, you know, venture out of their core proposition?
So what I would say is, you know, it should not be a function of capital that is available to you, right? It should be a function of the product market fit. So for companies, for example, you know, SaaS companies, right? It's a product market fit which is easily replicable to global markets. So it makes sense to probably, you know, go into the international expansion sooner. But for a localized business like probably a Chalo, you know, there'll be so much of local nuance that if you want to go into an international geography, you have to probably start from scratch, right? Keeping in mind the local market. So I think it's important to understand the product market fit that you have, you know, the consumer and the additional effort that you need to get into an international expansion.
Okay, so it's really important about the product, you know, market fit. And, you know, let me bring you in here. Having said that, you have, for instance, you have expanded into second category. Are you also looking at stepping out of India?
So I think again, see, it took us 7 years to start the second category. I think after and when we started the second category, the fan business was sizable. It was pretty sizable. And the reason was the same, right? You evaluate, how to evaluate categories is you come back to the basics, saying ki, do you really have a right to win in this category? Are you solving a problem which is not being solved by, and are you solving a big enough problem? Is the market, is the category attractive enough?
Abhishek, bring in your thoughts here, because, you know, you've been listening to the customer, you said, very closely. In this case, you got your ear very close to the ground. You're also a D2C business, right?
Yeah.
Different approaches, would you say, between what, say, you are doing and what Arindam is doing?
No, because see what they are trying to do is in the consumer space, right? What we are trying to do is in the health space, right? So say, for example, they are trying to figure out the, you know, how the food is prepared in the today's environment of modular kitchen. We are trying to figure out that how the customer or the health becomes beneficial for them, or taking care of health has a return.
It is becoming a fairly crowded market, right? I mean, a lot of people are focusing on this kind of health platform.
There is a lot of noise, yes.
There is a lot of noise. So having said that, you know, earlier on, it was all about who's blowing the bugle louder because there was a lot of cash backing you. Today, would you say that is still the case?
It is still the case. And, you know, I often joke about it that I don't know where it will land, because, you know, the sustainability has to come into picture. See what has happened in the healthcare space is also a lot of people got flown away by, you know, what is happening in the West. You know, the unicorns getting created, you know, just on one disease condition, and everything is there. We can also have that multi-billion-dollar value. But see, you have to understand the whole healthcare dynamics over here, right? In India, people are still struggling to find the healthy food. You are talking about, you know, getting the stuff. The purchase parity between the US and India is like threefold. We might be a volume country, but we are not that high value channel is not there, in absolute number too.
So, Vinayak, let me come in here because you have also, I'm taking forward Abhishek's point. You've actually gone ahead because, as what Aditya says, because of the nature of your product or the service that you're providing into overseas markets. And, typically, the expansion into overseas markets usually was followed by a lot of investors also following you, saying, listen, you're getting bigger, your brand's getting bigger. Is that the case today?
We expanded even before we ended up raising growth capital, right? We didn't raise growth capital to expand into the foreign markets. You don't need money to expand, right? It's just that in the last few years, there was such easy access to capital. Everyone thought that you could raise money, and raising money means raising valuations up. Everyone just thought that that's a business that everyone needs to run. No one focused on really building a business. I think we did not have that luxury. We never ended up raising money just for the sake of it. Valuation was never the out that we were trying to chase. We were trying to build a business, and businesses are not built overnight, right? You can't raise $100 million and build a business in 2 years. It's absolutely impossible. Whoever says that, a lot of money can help you build businesses overnight, it's not true. If businesses have to be built just because of capital, we would have seen better businesses coming out because there's so many unicorns in the country, right? It takes years to build businesses, and that's how we also took our approach.
In between the golden era or the bubble era, the business became to raise funds.
Yeah, exactly.
Not to create business.
Exactly.
Right? Not to create. The focus moved that, okay,
I need
it's
to
not
move from
important
funding
that
round to round.
how important my business model is, how sustainable it is, how much value it is, valuation I am getting. So it became the game of valuation.
This time people are just focusing on when are you becoming, like candidates ask us, or people like around the ecosystem
they ask you when
you
you're
are
becoming
going to be Soonicorn and you are going to be unicorn soon. And we just think that, we really think that we have to solve this problem. And you are not thinking about Soonicorn or unicorn, you are just trying to solve the problem, because even if you run 100 buses effectively, you are going to help the country and people who are dealing with this problem.
So would it be fair to say, I think at least from our panelists, that the phase of chasing that target of becoming a unicorn is perhaps dimming a little bit, or has stalled?
Definitely.
Okay, it's all about returns.
And when you become unicorn and your share falls, then entire world is watching.
Ouch,
right?
ouch. I was just going to come to Aditya on that.
So this entire bubble of becoming a unicorn and, going IPO and this, that, I have seen that, been there, done that.
Become a unicorn,
Really dangerous.
go to the IPO
Very
market,
dangerous.
raise
Very
big
dangerous.
funds. Aditya, you've seen that story. We've all seen that story. And today we are seeing investors, breathing down their necks. We're hearing stories of, cities being shut down because they've expanded too fast.
And you fire thousands of people and you hire people.
So the fact of the matter is all of these businesses need money. And it seems like the equity window is sort of closing a little bit. So in order for them to continue in their business, and not all of them are profitable, they still have that runway, it's great businesses that they're building. I mean, how do they access financing, and what's the debt side of the market looking like? I mean, are you seeing a shift from equity towards debt?
So what I would say is not really a shift from equity to debt, but yeah, of course, what we are looking at is debt becoming complementary to the equity, because right, the risk capital has to come in from equity given the nature of the business. As companies are moving faster towards profitability, and we have quite a few companies which are already profitable, right? And some of them are here as well. So of course, they have an option of debt capital solutions, right? Especially on the short term to start with. And then there are a lot of investors who are also looking at deploying debt capital from a long-term perspective. So that is something which is definitely coming in handy. We are helping a lot of clients, with debt capital solutions, especially on the working capital side. So yeah, that is definitely becoming a option.
So equity, that window is sort of getting a little narrower. Abhishek, you were saying that you are disagreeing with that. You're saying you're still, if you have a good enough story, if you have good enough financial metrics, equity investors are still willing to follow you there. Okay, but with a lot of riders, a lot of conditions,
no, it's not about the riders.
Okay.
It's not about the conditions. See, it's about realization, right? Numbers don't lie. Right, so as long as your numbers are honest, the investors are there, right?
So equity will still be the
it will still be there. So
it's just become expensive,
right?
It's become more.
It's more expensive now, right? Like earlier, you could raise a lot of money and dilute much lesser equity. It's just that the market has changed the cost of equity is expensive now. So if you're really going to give up equity, you also have to understand that it's not going to be the same thing that's happened in 21. It's going to be much more expensive. That means for the same amount, you're end up diluting probably twice now, twice as much as what you would have diluted in 21. That does not mean that the investors are shrinking or the equity windows are narrowing down. It's just that the quality of investors are going to change. The way money is going to follow you is going to change. And I think investors are now going to become smarter about their investments rather than just trying to invest in like 1,000 companies. They will cherry pick the companies now.
Okay, so smarter investors.
They keep comparing also because they are investing in 10 companies. And now investors are smarter and they are very involved in businesses. This is what I have seen.
Wasn't that always the case, Arindam?
No,
it was not.
No,
I have
today
seen
it's
it.
not. I don't think investors get involved in the business. I think what has happened, what has changed is diligence has started becoming stronger. In the funding bubble, a lot of investments happened without proper diligence. I think we are seeing a lot of outcomes we have seen in the last 6 months where proper diligence was not done and it was basis some paper numbers and something. So I think that has changed. Second thing, valuations have gone more realistic. And I don't think it's bad at all for founders also. Because the moment you are overvalued, right, you are factoring in a lot of future growth and which you are not sure about. And then you have to deliver that growth at any cost. And that cost usually is your profitability and your unit economics. You build businesses in a more capital efficient way. You don't burn a lot of money unnecessarily. And then there's not that pressure of growth which is already built in your valuation.
So does this mean that risk taking has come down a little bit, Abhishek? I mean, are you far more cautious now? I mean, what does taking risk mean in today's market?
The whole startup ecosystem is a risk.
Yes,
if
but
we won't have the risk-taking capacity, we won't sit here.
Let's put it this way. 2 years ago, would you say it was like, you were pretty much, I mean, you were called cowboys of the, the Indian cowboys of
No, but that's how you need to mature. Otherwise, how do you build business or the new economy even for the country? Right? If it's not wild west anymore, right? What used to be even in the startup or the financial world also. So you need to grow, and that's why I was saying you need to keep on evolving. It's the evolution which is more important. Everyone thought, rightly said.
But is equity still the preferred route? I mean, or
right equity.
Okay, what is right equity? Vinayak, what's right equity for you, for instance?
I don't know the terminology he used.
Okay.
It's something new, but I would term that as just the right set of investors, right? I think it's very important.
Investors who align with your vision?
Yes, exactly.
Yes.
Very important, right? Very important that you get
say.
investors that see eye to eye and understand that businesses are businesses and not some kind of a gimmick that will happen overnight. Or it's not going to turn...
Aditya, come in here. Very interesting insights that we are hearing about the right kind of investors. I mean, is that something that you see from a lot of clients that you're advising?
No, absolutely. I think it's important to align with the vision of the founders, right? Because that's when you can align the goals from an investor point of view as well. So I think it's eventually, the founders who need to run the business, right? So while from a decision-making perspective, the investors can provide advice and, they do provide advice if they understand the business really well, as, she mentioned. But I think from a perspective of running the business, it is the founder that understands the business really well, right? And maybe, just taking a step forward, if the companies are looking at, let's say, inorganic growth for that matter. So it should not...
In fact, let me bring in here Priya, because Priya has, had some inorganic growth. You've acquired a couple of companies, right?
So, 2 things I wanted to say in continuation with what Aditya is saying. One is the kind of investors you are choosing. And I have been seeing in 20 years, after Carvale and then Chalo. So, for example, our investors are Lightrock. They invest in impact fund. So, when they are investing in impact fund, I know they are seeing sustainable long-term business, right? And they are involved and evolving also every day with us. So, when they are choosing you and you are also, now I have luxury to choose my investors too, that I don't go to people who are not able to understand that we are solving a long-term 50 years problem. We are building product for 100 years. So, I don't want to go with you and listening after 2 years ki profitability kahan hai, and I am very mindful of expenses. I am very mindful of building a lean team because I have seen COVID and I have seen 4 times, not once that okay, this is the winter. I have seen winters, this is our 4th time. This is not the problem. Problem was when our entire business shut down during COVID. and it was a public transport.
Indeed.
And then I knew that I have to revise and pivot, right?
And prepare for those black
change the
swan
way
events.
I was thinking, and we transformed to digital immediately. That okay, I have to focus on digital.
In fact, that was going to be my next question. I mean, pandemic was a time when everybody was focusing on digital, on online. I mean, now we are returning back to in-business. You know, how did it impact you, for instance? I mean, it was all about being those...
Pandemic from a business perspective was good for us.
Yeah.
Because people got more aware about their health. They realized the importance of taking care of their health. Right? You know, those are the things people always talked about, but never thought that.
So you saw a spike in your business, which a lot of businesses did.
We saw the spike in the business. We saw that, and you know, because we never went in that, okay, we'll burn it and, you know, we'll create that overnight hockey stick, as we call it in the startup world. We said, okay, we will grow it. We will address the need and what's there for the demand. So we have been able to even sustain that post pandemic also.
Okay, what about you, Vinayak? I mean, pandemic would have been the reverse for you, right? I mean,
pandemic was absolutely amazing for us.
Okay.
I'm glad it happened because
sporting events were pretty much closed
sporting
down.
shut down, but digital consumption completely changed overnight, right? So that means that a lot of people started watching content online. Everyone had more time on their hands, right? So basically everyone wanted to consume more content. Platforms didn't have anything to do but create more content. That means that use archival content to create more content and pass it down to the users. That's exactly that gave us the push that we needed because everyone wanted to go digital and they wanted solutions that can automate it.
So both of you, pandemic was a great time. In your case, it was a bit of a setback. So it sort of taught you a lesson in terms of how to prepare for these kind of black swans.
Country was shut and buses
Public
are
transport.
like lifeline. And we thought that it is going to be difficult, and it was difficult initially. But when things came back, what we were chasing, authorities and people to get digital, now everybody was ready to go digital. And immediately we implemented the entire digital solution, and it worked wonderfully in our favor.
Arindam, you know, again...
For us also, I think it worked both ways. The first way, when the country was shut down for 6 weeks, we were not able to manufacture, not able to supply the goods. But again, there was a quantum shift, right? So e-com went up significantly the moment things opened up, and there's a permanent shift. Digitally influenced sales also started going up. So people were used to buying online, researching online, and because of those 2-3 months when people are spending, so they're researching about each and every category.
And you have a fairly strong online presence.
Yeah, fairly strong online presence.
So everybody had wins, some losses, but mostly wins. And now we are talking about a global recession. And you know, Aditya, the thing is that, you know, everybody is now talking about a recession, about demand slowing down. In India, we are saying, listen, it's happening in patches. What does it mean for the startup ecosystem? What's the road ahead? Is there a bit of fog on the windscreen?
So I think while it would not be probably fully true to say that we are decoupled with the global world, right? Because there are definitely strong linkages that we have, but India is in a sweet spot, right? As everybody is saying, from a major large economy perspective, India is the only large economy which is still talking about high single-digit kind of growth on GDP, which is of course being watched very closely by the investor and the world, right? Because it's very promising.
But costs for businesses are definitely going up, would you say?
Absolutely. I think inflation is, persistent and it's not really subsiding. So rates are going up. Of course, those bearings are there. But when you look at the world, probably in a relative term, India is still quite well positioned. So of course, I think the flow of capital should also be relatively better for the Indian ecosystem.
But would you say that, for instance, our markets haven't been, stock markets haven't been performing too well, and it's said that perhaps the primary market route, there were a lot of IPOs which were lined up, have stalled, and markets haven't been going anywhere for the last almost a year or so, right? So, what happens then to the startup universe who are looking to tap this kind of equity funding?
So I think the process is delayed, right? And over the last 10 years, if you see, startups have been thriving on private capital,
right?
Not really so much
and
on the public capital.
And that trend is likely to continue.
That trend is absolutely likely to continue. We see so many VCs, having India-focused funds which they have raised in the last year and a half. All that liquidity is waiting to get deployed.
Priya, how would you like to take it forward? Because it appears that the hit that the secondary markets have taken doesn't perhaps apply to the startup world, because you're still seeing, equity infusion coming in. How are you planning for the road ahead? What are going to be your key priorities?
Good thing is the kind of expansion we have seen with Chalo. Like not only like we are trying to solve the entire problem as holistic, and our model is integrated, and public people like public sector, government people and the private operators, everybody seem to be ready to take it up. Most of the cities when we go to and meet them, they are run by like government regulators.
So you're optimistic about the future?
Very, very optimistic, because this problem is supposed to be solved and we will solve it.
Arindam, summer is around the corner. We are waiting to be, burnt to a crisp.
Yeah.
So what's going to be your focus area? Domestic, international, or, what
No, I think for us,
category-wise?
Domestic, I think again the reason is because the moment you go international, the product is not the same. I think we mentioned this, if you can expand internationally if you have the same product. We are very much optimistic because the India consumption story has just begun. We are seeing the trend of premiumization across categories. We are operating in the premium segment in a fairly mass category, and that premiumization is going to happen across all the consumables, whether it's consumer goods or durable.
Okay, so you're going to focus on the premium end of the market. Vinayak, as you said, you've expanded quite aggressively, across the world. Tell us what is going to be your key focus area, and where do you go from here?
The idea is to continuously keep focusing on the core part of the business, keep growing that, go a little bit more deeper into the sports segment. We're trying to tap into the tier 2 and tier 3 sports that we call it now. Apart from that, we are also coming up with our own product suite within the entire media ecosystem. So we're trying to figure out what all baskets we can really cover.
Abhishek, you've sort of, cut to the chase and you say it like it is. What's the plan ahead?
India still remains the, the focus area because the disease burden in this country is huge. We are expanding internationally. We are present in UK. But the model and the strategy is very simple. We stick to our core of the tech and the service and deliverable, but then we form with a JV with a local partner for the market access.
And Aditya, final word to you. This is a very different sort of, voices. Each series, each round that we've had, and this is Mumbai's turn, there's a very different focus, a different breed of startup entrepreneurs, right? How would you sort of sum it up?
So what I would say is, the way I see the conversation going, I think people are thinking in the right direction. The one key thing which I think is important and which I see a lot of focus coming back on is the customer centricity and the constant innovation. That is something key to the whole startup ecosystem. And as my fellow panelists said here, right, that we have to solve the problem and be focused on it. So for example, we as a bank, banking would generally sound a little more sort of simplified and standardized, but I think there's a lot of innovation happening in the whole fintech and the banking space as well, right? So we are also riding on that, innovating for our clients. So we need to constantly innovate to be able to sort of bring that value.
Innovate and you customize solutions depending on the demand of your customers. And that seems to be the underlying theme. A lot of innovation. I think we are still seeing, the risk-taking appetite has not gone away, but the focus is really on the core aspect of the business. And we've seen, I think, all these startups have a very bright future ahead. That brings us to the end of the Mumbai chapter of Citibank Moneycontrol in conversation with Startup India. Thank you so much for joining us.
Citibank and Moneycontrol in conversation with Unicorn Startups of India, powered by Citi.